Hi everyone, this is Rick Spooner. The chart I'm looking at here is the major Australian retail stock Woolworths. This stock has outperformed the broad 200 index in recent days, but has arrived at quite an interesting situation at the moment, I think. And so I thought it might be an interesting chart to have a look at on the blog. I'm going to start with a weekly chart just to have a look at the big picture landscape of this market, but as you can see, since late last year, this market has been in a broad-based downtrend, interrupted by a correction, from February or March through to about June or July this year. And in recent weeks, we've also now undergone a rally, which at this stage looks as though it may also be a correction. And I think one of the interesting things about this rally at the moment is that it's just got itself to, but has not really breached a sort of zone of resistance, if you like, around the last major support level. Now, provided it doesn't get up above that zone of resistance, which I've put a dashed red line across here, that means that the overall downtrend may still be an impulsive one. And this sort of situation is strategically interesting for traders because it puts you in a position of quite a healthy potential risk-reward sort of a trade, where if you enter looking for a resumption of the downtrend, the reward can be pretty significant if we are to get another decent leg down and a resumption of an impulsive downtrend. On the other hand, if you're wrong about it, then you can place a pretty close stop, meaning that the potential size of the loss compared to the size of the profit is relatively attractive. Now, before I leave the weekly chart, the other thing I think that is interesting about this stock at the moment is that the stochastic oscillator on this bigger, higher time frame chart is now up in the overbought zone. Again suggesting that if we are to get some sort of a break to the downside here, that it could be one that went a fair way as the market worked itself out of the overbought zone and potentially right back down towards the other extreme in the oversold sort of an area. To hone in then on the daily chart, if we look at the latest little leg down and the recent rally, that last rally we looked at, which has parked itself up at the dashed red line now, has subdivided itself into three swings, which is the classic potential ABC pattern, as I've noticed on the chart here. And one of the strategies that we commonly feature in the chart is to look for areas that might represent the end of an ABC corrective pattern, providing a chance to get in very close to the end of that correction if it is an ABC correction, and setting yourself for a resumption of the downtrend. Now, the technique used to do that, or one technique, is to use Fibonacci tools, and as you can see, we've arrived at or just very close to a Fibonacci cluster area centered around that 2640 sort of an area, and there are three Fibonacci measurements, all of which come out at the same price. The first is a 76.8% retracement of the last major swing down. The second is a Fibonacci projection. It projects that the distance from B up to C will be 127% of the distance from the beginning or lowest point of the last major swing down up to A, and it also projects that the B to C swing will be 261.8% of the A to B swing. Another attractive feature of this setup is that all this coincides with the 200 period moving average, which is this green line across here. As you can see, price just flicked up above the moving average but has now retreated down underneath it. So in terms of potential entry strategies, one approach to this is to enter on a close below the candle that makes the peak at this Fibonacci cluster area. Now, this candle at the moment is Tuesday's candle, and as you can see, as things now stand, its high is surrounded by two lower highs. So it's potentially a trend peak, but it isn't yet a peak. What we need to do, in fact, I think after I recorded this, we actually have moved down under the low of that candle, so we are now making lower highs and and lower lows, so the little short-term trend has changed now from down to up. So that's saying that potentially this market has now stopped at the cluster, but some traders will wait for a close below that low just to give added confirmation. And one aspect of that as well is that there is another alternative as well. If we were not to close below this low today, then it's also possible we might just continue drifting up a little bit further, and we may yet to make a peak, perhaps up a little bit further at the cluster zone or just on the other side of it. So that's something else to watch out for as well. And finally, just in terms of beginning strategies, always important to consider your stop loss. One approach to that in this sort of strategy with a potentially large payoff ratio for those trades that do work is to have your stop just above the first point of failure, which would be above this high, because we want this now to start into a major downtrend. If that doesn't happen and we move up again, obviously taking out that recent high would be a clear sign of failure. And with this sort of big payoff ratio, one fairly common strategy is to really have your stop just right tight at that level, maybe just 1 or 2 cents above it plus the spread, so just a few cents above that level would be a typical way to go. Well, look, thanks for listening in. If this all does come to pass, and if we do get a setup, and if a bit of a downtrend does start to emerge, I'll come back to this chart and have a further bit of a look at some different approaches to setting profit targets and to moving the stop as the trade unfolds.